Amazon releases third quarter results after the markets close on Thursday. Analysts expect per share earnings of 80 cents on sales of $32.7 billion. Here with more on what to expect is RJ Hadavi, a Morningstar analyst who covers Amazon and joins me now from Chicago. So RJ, let's start off more broadly. Tell us what's the main theme you'll be watching for in the report on Thursday.
Really, it's two themes I'm looking for. One is kind of what to expect in terms of demand, what the sales expectations are for the fourth quarter. Obviously, what we've seen is that a lot of migration to online sales the last couple of years. It really resonates with consumers. But the interesting development this year is that I think there's going to be a tremendous amount of demand from other consumer brands and retailers selling through Amazon. So that's one of the key themes, because I think that's one of the components of the company's future margin expansion. The other thing that we'll be looking for is, this will be the first third quarter, which typically is a heavy investment quarter ahead of the holiday season. This is the first time we're expecting positive operating income in several years, and I think a lot of that has to do with the success of Amazon Web Services, Prime memberships, and third-party sales, to kind of see what kind of profitability the company is able to turn out, and typically what's their heaviest investment period. So those are the two things that I'm looking for this quarter.
But profitability seems to be taking hold, right? This was a company that was at one point so focused on revenue.
Yep. I think that the narrative about this company not being able to turn a consistent profit, that narrative is really set sail at this point. I think that this company is starting to develop a very compelling, if measured, margin expansion story over the next couple of years. I think Amazon Web Services is a big part of that. This is a $12.5 billion business this year that's going to be growing at 30–35% the next 5 years, with margins potentially getting up to 30% of that business. Right there, that's going to be almost 3–4 points of margin expansion over the next 5 years. Then you look at things like third-party sales, where Amazon's just taking a commission on that sale from a third-party vendor. That's also a nice margin accretive transaction. And then Prime memberships. I do think the company generates quite a bit of profitability on a per-member basis. I think that's something that's been a little bit overlooked as well. So with those three dynamics, I think that idea that Amazon can't be profitable is quickly dying out.
All right, let's talk about Amazon Video. Last quarter, we heard that Amazon received 16 Emmy nominations for some of its original programming. What should we expect on that front?
Yeah, I think the content offerings, and not just video, and I think they've done a better job creating some original content in recent periods, and some of the other things. But I think that the entire content portfolio, including video, audio, book lending, I think what that does is it makes the Amazon Prime membership that much more compelling. Obviously, we've seen some competitors try to get in and match Amazon's shipping speed, but honestly, unless you're offering an Amazon Prime member something they're not getting through Prime, which is very difficult given the shipping and content benefits that you get to that, I think there's going to be a very hard press for consumers to switch. And I think that's going to, why Prime honestly is going to go down as one of the great innovations in the consumer space the last couple of decades. Is it's been costly to build up, but it really resonates with consumers, and it almost adds an element of switching costs, which is almost unheard of in the consumer space.
All right, just very quickly before we run out of time, you mentioned guidance earlier. What should we expect the company to say about fourth quarter, which of course includes the all-important holiday shopping season?
Yeah, I think that it's going to be a pretty wide range as usual. Management you could drive a truck through guidance for this, but I'd expect pretty healthy growth rates, probably in the kind of the high 20s, mid to high 20s in terms of revenue growth. But that operating income line, I think, is what's going to really catch a lot of people's eyes. I think that's going to be the big number. Put them probably at close to somewhere between 2 and 2.5% operating margins for the full year implied with the guidance. So that's the number I think that the market's going to be fixated on.
All right, RJ, we'll leave it there. RJ Hadavi from Morningstar, thanks for joining us. Good to see you.
Thank you.
I'm Scott Gam, and you're watching The Street.